Hello and welcome to India Market Close, and it is weekend cheer for Dalal Street. The markets have kick-started the earnings season with a bang. The Nifty making a new record high. 21,900 is what we were at as we speak, over a percent gains, 254 points as we get into the last hour of trade. So we started really good on back of emphasis, and we just constantly build on those gains on the Nifty and of course stocks as well. The Sensex is up about a percent in quarter, 72,610, but it's all about the Nifty this afternoon, 21,900 at a record high on the Nifty in today's day of trade. So it's looking very, very exciting as we look at it. It's all about earnings, it's all about IT, and that really is the big talking point this afternoon. Let's quickly pull up the sectoral picture and all about take a check of all stocks. Remember, you're also looking out for HCL Tech, which will hopefully report anytime soon. But the stock of the day is Infosys. I mean, you can't get your eyes off that. It's open with a 5% gain, 8% higher at the day's high. I guess in the case of Infosys, no news has become good news largely for Infi. Tech Mahindra, of course, ahead of numbers, is up 5%. LTIM is up 5%. Wipro is looking good. TCS also not too far behind. 4% rally on TCS is what we had. Remember, the handover we got from Wall Street as well showed us that Infosys ADR was up 5%. So we literally took that handover, built onto those gains. Brokerage is largely optimistic. Most believe the bad news is already in the price and IT could be in a sweet spot. The whole index as well as trading firms, so broader market IT is also having a pretty pleasant day of trade. Along with that, you've got Adani Enterprise, it's up 1.5%. Metals aren't doing too badly. You've also got banks that are in a sweet spot. So leadership, which was missing from the banks in the last 10 trading days, is actually coming through this afternoon. You've got stocks like SBI trading fairly firm. Well, along with that, those are a bunch of gainers. On the losing side, it's defensives taking a bit of a break. So you've got Apollo Hospital, Cipla, Dr. Reddy's, which are trading subdued. No big cuts. It's largely flat to slightly lower. That's largely what we have in terms of trade. Asian Paints, NTPC are having a slight cut afternoon. So that's pretty much the markets. Harsh, record high, 21,900. Lots of weekend cheer for D Street. Bulls clearly in control this afternoon.
Well, absolutely. And Samina, last couple of days we saw Reliance lead the pack. Now we're seeing the IT majors take over. So we're seeing some of the frontline stocks really doing extremely well. We saw the likes of a Reliance go up 5% last couple of days. Now we have the IT pack leading the gains in trade today. Let me also, if I can, quickly point out with regard to contributories, just look at the way Infi and TCS both are contributing to the Nifty 50 itself. We're seeing roughly 130 plus points contributed by both of those out of the 280 positive contributories and out of the 250 or 260 odd points that the Nifty has gained in trade today. So a very, very solid set. In terms of some specific stocks which have been in focus all the way since morning, we had the likes of 5paisa, which came out with numbers down around 1% or so. But that's about the only one in red that I see. We have the likes of TCS and Infi. You did speak about that. I won't get into it. But you have HG Infra, which is up 3+% in trade. You also have the likes of a Bansali Engineering up 3%. Focus shifts back to Polycab. That one is also in focus, up 2% plus. And we had Tark Limited as well, up 2.5% in trade today. So all of those ones are also buzzing, Samina. But let me bring on board Dharmesh Kant, who's the head equity research at Chola Securities, to try and break down how he's viewing markets. Dharmesh, markets at an all-time high. How should one place themselves at this point? Would you call this more of a bottom-up market? Would you call this a market where you believe that there is still some bit of gains to be built in, given that financials, especially the larger ones, haven't really moved yet?
See, it depends upon what kind of a time horizon you are looking forward to. I mean, if you are looking at FY26 or 25 earnings discounting, then this market is definitely a bottoms-up market. So my own sense is like we are working on an EPS of around 1200 for Nifty 50. based on FY25 numbers. So based on that, even if you give it a 18, 19 kind of a P multiple, so 22,000 to 23,000 should be the fair value. Usually in such a kind of a heated market when liquidity is the key driver of this market, and too many money is chasing too few stocks. So in such a scenario, you normally get a multiple of 2021. So at 20 times 24,000 is the year target, which we have published a note month back for the Nifty, and the market is proceeding in that direction. So since this is uncharted territory, usually that fear is always there. I mean, the scope of error is very less. As you have seen today in the case of Infosys or TCS. TCS did come out with slightly better set of numbers. But Infosys, as our anchor was just pointed out, that no news is a good news, has played out definitely well for Infosys. And more importantly, there was no bad news which came. I mean, there was no adverse commentary which came from either Infosys or TCS. And that has been helping the IT stocks. So it's a bottoms-up market, value buying market, and index level will keep, I mean, the corrections will be bought into. That is how we are seeing the market. And one has to, position oneself correctly, sector-wise and stock-wise in such an environment.
Right. Kunal Shah, Senior Technical Derivative Analyst of LKP as well, joins in. Kunal, what an afternoon. It looks so fatigued in the early part of this week, and suddenly come Friday, come earnings, and the Nifty makes an all-time new high. At 21,900, would you be brave enough to initiate a fresh long and go into the weekend?
I think definitely, even at the current levels, fresh longs can be initiated. 22,000 is now just a number. You will be getting that number in the next 1 to 2 days. Overall, I'm looking for 22,200 on the upside for the Nifty index. We have been consolidating in a broad range since the last 1 week or so. 21,500 was the support and 21,750 was the resistance. Today, finally, we broke out from that sideways trend, and we got a breakout with volumes. So I think definitely we are going to head towards 22,200 going forward. So one can initiate long positions even from the current levels.
Kunal, I'm going to quickly come back to banking in a minute because there's enough euphoria there too. But Infosys, and that is the stock of the day, saw a gap up of 5%, trades the gain of 8% right now. How does this one look on the charts for fresh calls?
I think definitely we have seen a massive underperformance by the IT space. And now finally we are seeing a good run up in the entire space as well. In fact, the large caps and also the mid caps are looking very good. Particularly talking about NP, yes, the stock has given us a fresh breakout on the technical charts. Even on the weekly and the monthly time frame, the stock has surpassed its previous 3 weeks high as well. So I think definitely any dip what you get already, the stock in today's trading session is up by 7%. So if you get any dip toward that mark of 1600, 1590, that could be an ideal zone to initiate long positions, keeping a stop loss of 1560 on the downside and looking for targets of 1650 to 1670 on the upside.
Right, and Kunal, your view on TCS as well, because that one's been buzzing all day as well.
So I think both Infosys and TCS both looks very attractive at the current level. In fact, the chart pattern structure for both TCS and Infosys is like an identical pattern. TCS almost about to get to that 4,000 mark. So I think TCS also remains a buy from the current levels only. Now 3,800 continues to be a strong support. On the upside, immediate targets would be 4,000, and above that, if it sustains, then we'll see 4,200 coming for TCS.
Right. We did catch up with the management earlier in the day. They did talk about how the recovery may not be very visible at this stage, or there might still be no sort of commitments being made on that. But here are what they had to say about your order book and the guidance going ahead.
I would probably say we're cautiously optimistic. I think the way we see is that the demand, if you look at the order book for the last 4 quarters, has been very strong. The previous 3 quarters, we clocked almost 10 billion order book. In Q3, it was 8+ billion. So it's a very strong order book. And what was not helping is, as we talked about in the past, some of the older programs not getting passed or getting reprioritized. So that is causing a dip in or a depletion in our overall revenue. So as much as the new programs start, like whatever we started in the last 1 year, we are continuing to grow all of them, and they are tracking as per schedule. So to that extent, what would further drive growth would be a better overall economic macro sentiment, which would give the conviction to the people that they can invest more or they don't have to stop the ongoing projects.
Right. Let me quickly also flag off, you have HDFC Life's numbers coming through. That stock has slipped in the red. If we can quickly mark that. The earnings are flashing at the bottom of your screen. We have net profit, which is rarely the most important metric tracked for life insurers, but that's come in slightly lower than estimates. But we have revenue, which is for Bharat Bijli as well, flashing at the bottom of your screen. That's stock down as well. But let me quickly stick to IT while we have that. Dharmesh, your views with regard to, let me first take it to TCS. It was a fairly decent set. Margins came in around 50 bips better. Where should one see TCS in terms of valuations? The commentary also looks strong because they continue to believe margins will get better in this environment.
Yeah, definitely. But the business outlook, which the management themselves said is stabilizing but not very clear. I mean, there's a hope and expectation that things will follow through as the times roll by. I mean, 2 to 3 quarters is what they have guided before the pickup is there. But the problem here is the IT spend, the discretionary spend, which these guys are talking about, is now coming into new products which are AI enabled. Both Infosys and TCS as of now doesn't have a product, software product, which is AI enabled. They have done the tie-ups and they are in the process of getting it done. So that's at least 3 quarters to 1 year away before they can meaningfully add products related to AI and which translates into their revenue and profitability. So there's the catch which is lying. I mean, discretionary spends are happening in the US. It's not that it's not happening. It's not happening for the companies from Indian origin, where it is, the products are now becoming redundant, which these guys have. So that's a bigger challenge. I would like to give it a pass as far as valuations are concerned for both these companies. I mean, the momentum is up. They are riding and hope trade is playing out. But that is how it is as of now, because one has to look and see how, revenue after a year translates. And for that, at least 2 quarters will have to pass through. Let them first come out with first product, first revenue, which is trickling down to their profitability through the AI platform. So that's the future. No second thoughts on that.
Gentlemen, stay with us. The market's at the day's high point, but Bharat Bijli has suddenly seen a very sharp fall coming in at the day's low on Bharat Bijli. Numbers are being viewed as a negative potentially, and that's why the fall. Just to take you to that, revenues coming at 423.74 crores versus 388 crores. So it's a 9.2% increase year on year. EBITDA is also marginally higher at 38.98 versus 32.62 crores. Again, a year on year jump of 19%. Margins are at 9.19 versus 8.4. 79 basis point improvement in margins. Net profitability also higher this quarter. I'm not sure why the street is reacting the way it is to Bharat Bijli. That's the stock graph in front of you. Right after the numbers, the stock has seen a very, very sharp fall coming in. We'll talk to Dharmesh about that in a minute, but for now, the street giving Bharat Bijli a thumbs down. HDFC Life as well seeing a little bit of a reaction, a negative reaction rather, on its earnings. We'll take a break. We'll come back. Keep the focus with earnings, markets, and we have with us Veranda Learning that joins us to talk about a recent or an acquisition they just announced this morning.
Welcome back. We have a very interesting development coming from Veranda Learning. They plan to acquire Tapasya Educational, which is a 50% stake in Tapasya Educational. Stock buzzing on the back of that. We have Suresh Kalapathy, who's the ED and chairman at Veranda Learning. Welcome to NDTV Profit, sir. It's good catching up with you again.
Thank you.
Sir, tell us, what does this acquisition entail? From the way I'm looking at the numbers broadly, it's margin accretive for you. And any further acquisitions, what does this add with regard to your current armor in terms of your suite of educational services?
Thank you for the opportunity to come on your channel. I think as we have maintained, we are stitching together the entire ecosystem under Veranda Learning. Tapasya brings into this mix, for the first time, we'll start managing a set of about 10 colleges. We had acquired school management services in the past. To that, it adds another set of almost 20 more schools that will now come under the management of Veranda Learning. But for the first time, we are into managing colleges. So with this acquisition, we'll start with about 10 colleges, which will be managed by us, which offers programs of BCom and BBA, but we plan to expand the scope of programs that we will offer under Tapasya over the next couple of years. The acquisition has been done at a 9 multiple of FY24 profits. So the enterprise value is about 240 crores. We are acquiring 50% to start with at about 120 crores. Tapasya currently has about 13,000 students in its education network. And yes, it adds to our set of students who are going through our formal education, both in K-12 and colleges.
What is this expected to contribute to your top line going ahead? And when do we see this revenue accretive? Is it going to be right away?
So it's going to be very marginal at this stage. It's going to have a full reflection for FY25, starting from April 24. This should add close to about 30 crores of EBITDA for 25. That FY24 EBITDA was 26. So it should add about 30 crores by next year. And the revenue should move up probably from 65 to about 75 crores. This should start reflecting in our FY25 numbers.
Right, and what's the pipeline like with regard to acquisitions? You continue to look seriously out for more acquisitions. Is that how one should look at it? And your revenue trajectory, 400 to 800 CR, 400 CR FY24 expected, 800 CR FY25, if I recall correctly. Is that remaining as is? Is that where we continue to see it?
I think that's what we are working towards. We are currently working on a few more acquisition targets, various stages of discussions, diligence. I think by about April of this year, we would have completed substantially on a journey of acquiring businesses and stitching this ecosystem together. On the back of that, yes, we expect to see how we hit our numbers for FY25 at about 800 crores of top line. So we expect the top line to continue to grow at that pace. But a substantial part of our acquisitions is expected to get completed by April of this year. Subsequent to that, a lot of it will come from organic growth of the assets that are already part of this ecosystem.
Mr. Kalapati, a couple of questions. I want to understand from you how you funded this acquisition. And I know the growth path for you has been strategic alliances, inorganic acquisitions, and you've done a bunch of these in the past. How has this one been funded?
This is being funded through debt. Okay. So we have multiple options, but all of it is going to be debt for this round of acquisitions.
And it's 100% funded by debt. What is the cash on the books right now?
It's 100% funded by debt.
Okay.
While we continue to maintain a fairly healthy cash balance, but that would be more in terms of working capital in nature.
Also, going ahead, if this is the strategy to growing, would you be looking at any fundraising plans?
For the next round of acquisitions that we are targeting, there is a plan to raise. And again, it's going to be a combination of debt, stroke equity-like instruments. But combination is yet to be decided.
And have you got a board approval in place for this fundraising plan that you've got in mind in a quantum that has been internally decided?
There is a fundraise plan which has already been presented to the board. Okay. The total debt is expected to go to about 400 crores, including the current round that we are raising and the existing debt in our books. All put together should be about 400.
Just one last question before I have to let you go. We saw a pretty sharp move quarter on quarter from your June earnings to what you posted in September. A large chunk of other income is what we saw in those numbers. Is that going to continue? Was that a one-off? I'm not trying to preempt your earnings, and I know this would not be a fair conversation to get into. But other income may continue to support profitability going ahead?
All our income should be coming from operational income. Okay. Without looking into any of the one-offs, we expect to deliver between 65 to 70 crores of EBITDA for this year. And currently, we are holding those projections.
Right. Thank you so much for that perspective, Mr. Kalapati. It's been a pleasure speaking with you. Thanks for speaking with us and giving us all of that view.
Thank you.
Very quickly, I will stick with the Nifty IT and I'll stick with the bellwethers who have come out with numbers. If I can quickly go to our guests for a quick check with regard to the view. Dharmesh, you suggested that you were not super keen with regard to both of these because you felt they were overvalued. How do you look at valuations right now, and where would you value them? Where would you see value starting to get more comfortable for you, if I can ask?
Yeah, for me, for valuation to become comfortable is when the business starts flowing in. And that means that there should be revenue growth on constant currency. At the same time, the outlook from all the sectors, BFSI in particular, should come positive. So right now, what they are seeing is curtailment of expenses on discretionary, as well as a part of a non-discretionary expenses from the major sector, which has been the BFSI for them. If you look at TCS earnings, most of the earnings have come not from America. It has come through the Latin America, African countries, some part of Europe, and majorly from India. So it can always be argued that rest of the world is doing well. When US picks up, they would be in a sweet spot. And I think that is what is working out for the trade today. But my own sense is that that's difficult to play out in future. They have to come out with products which cater to the AI space in particular. So till that happens, it's more of a trading play for me.
Right. Understood. Got your viewpoint on that. But we've also got in two other big IT names which will come out with numbers today. And we have both of those on our radar as well. You have the likes of an HCL Tech, a Wipro, both of which are buzzing. Wipro up nearly 4%, HCL Tech up 3+%. And we have Tushar here with all that we can expect from the earnings. Tushar, with some perspective with what has happened in the TCS as well as Infy earnings, what can we predict and project with regard to what we can expect from HCL and Wipro?
Thank you so much, Harsh. Good afternoon, Samina. Good afternoon, Harsh. So what we have seen so far is TCS if they have to take some cues, TCS is up, has its single highest gain in the last 42 months. It's about 8% up. And I think taking cues from that, but I think HCL Tech and Wipro are both up about 4% right now. So what are the expectations from, say, a Wipro at this point of time? The revenue is going to shrink for the fourth straight quarter, as what the sense we are getting so far from analysts speak. But that is still in line with what the company has guided for. So we may see revenue decline by 3%, which is in line with the guidance that was given us in the previous quarter at about minus 1.5 to minus 3.5%. What also we need to watch out for is the EBIT margin, the profitability. The company has been able to maintain its profitability so far. Will it be able to do it in the future? We have to see. Analysts are saying that the IT services business profitability will decline by about 50 basis points. That's down to the fact that there were salary hikes, there was a lack of operating leverage. That will weigh on profitability. TCV, the total contract value or deal wins, will still be robust, like in the case of Infosys and TCS that we have seen. But how they convert into revenue is there. That's the question mark there. Both in the case of TCS and Infosys, there's still some time away for deals to meaningfully convert into revenue. What we need to watch out for Wipro, the margin impact of the salary hikes, the impact of the senior level exodus that we have seen since CEO Thierry Delaporte came to the picture 3 years ago and effected those restructurings. What will the consulting business look like? Given that we have no discretionary deals so far, we have no visibility also on it when it's happening. But as in TCS and Infosys' stock performance today show, no bad news is actually good news. So essentially, if the situation does not worsen for Wipro, we are looking for a decent set of numbers. As far as HCL Tech is concerned, it's a seasonal quarter, what we have been saying so far, but it has been for all the right reasons as far as HCL Tech is concerned. For platform and product companies, Q3 is the best quarter, followed by 2 quarters of, Q3 is their best quarter after 2 quarters of weakness. So expectations are that FY24 guidance will be focus, which was lowered to 4 to 6%, from 6 to 8%. There'll be a strong revenue pickup on the back of the Verizon deal that was struck on 1st November. The ramp up of their auto ER&D deal with ASAP of Germany is also coming into effect. A pushback or pullback maybe from their deal that was scrapped with the client State Street, who took over the entire BPO operations. So again, I think among the top 5, HCL Tech may post the best numbers, but as we are seeing in the whole pack, all of them are growing since the situation is not getting worse.
Indeed, Tushar, and it seems like the ones that haven't even had such a spectacular quarter are still getting a thumbs up on the street. So it'd be very exciting to see what happens once HCL Tech reports. The stock right now is also doing quite well. It's up about 3.5%, preempting a good set of earnings from the company. A few of the stocks that have gained sharply in the last couple of minutes is Birlasoft. If I can get Birlasoft on the screen, we'll get a sense of what is going on, and you can see the sharp spike on the stock. If I can get Birlasoft, that's the stock. It's up 5%. You've also got Alembic Pharma, the counter is looking good right now as we speak. ONGC as well is having quite a field day in today's trade. So Alembic, Birlasoft, ONGC all gaining on large volumes. On the sell side, you've got Metropolis. Big cut on Metropolis playing out right now. I'm not sure what's going on with the stock, but it does look like it's under pressure. Metropolis down about 7.5%, 8% on pretty healthy volumes as well. Alok Industries, that's again down by 6%. The stock had a very sharp run all through the end of December and early Jan, was up nearly 70-odd%, now giving up some of those gains as we see it. Kunal, it's 3 o'clock. How are you feeling about trades? Any top picks that you could recommend to our viewers?
I think one stock I would like to recommend from here is the oil and gas space. I think they have been doing very well, and the momentum is starting to build up over here. So I think ONGC looks very good on the oil and gas space. I think a fresh high has been made over here. It has been trading in a strong uptrend. In fact, in today's trading session, we have seen a volume-based breakout as well. So I think 223 is where currently the stock is trading, 223. One can look for an upside target of 230 on a minimum perspective. And on the lower end, the stop loss for it will be 219. So even if you get any dip in ONGC, utilize that to buy.
Right, thank you so much. We'll come back to you, of course. But before we slip into a very short break, two numbers which came out earlier on the show, we spoke about it as well. Let's have a quick look at Bharat Bijli. When we're looking at the sequential numbers as well, those look quite decent. Revenue is up 1% sequential, EBITDA up 3%, margin expansion of around 16 bips sequentially. And you have a net profit which has gone up by roughly 8% on the back of stronger margins. So clearly that one doing well with regard to the numbers, but languishing in trade, down 5% as we speak. We also have the likes of an HDFC Life. Now with regard to the key number with regard to VNB margins, and you can see that a bit of a spike on the stock over the last 20 minutes, and that's on the back of everyone reading into the numbers. We're looking at VNB margins which have come in at 26.8%. Year on year, absolutely flat, those VNB margins. But, when I'm looking at the expectations, it was more than 27%, around 27.2, 27.3% is what our poll was indicating the margins to be at. So clearly, your value of new business has not come in, which is an indicator of future profitability, just to try and break that down. And therefore, the stock kind of languishing in trade, 1% lower. But let's take a quick break. On the other side, you'll get, of course, the top buy-sell recommendations for Monday. And we'll also have a look at the derivatives market. Stay tuned to NDTV Profit. Welcome back. You're watching India Market Close on NDTV Profit. We have Agam standing by with a breakdown of the FNOQs for today. Agam, very interesting day of trade today, especially with the way in which both IT as well as realty are shaping up. But what does the futures and options data indicate about markets as we speak?
Well, it's a happy Friday, Harsh. For now, well, the benchmarks are at life highs, the Nifty specifically in this case, and we started seeing a little bit of position building yesterday. It's percolating today with another addition of 2.5% in open interest, even as the index now is within a kissing distance of the 22,000 mark. Is that a possibility in this coming week? It doesn't seem improbable. Well, but we'll keep an eye on that one. Let's move on and talk about the Bank Nifty, and well, that's where we have seen a massive amount of unwinding, a lot of shorts into the system. But remember, when the Nifty makes a life high, the Bank Nifty, at least over the past 2 to 3 times, has followed suit. So maybe this upcoming week could perhaps be about the Bank Nifty making that new high as well, in tandem with the major benchmark. We are seeing a 0.5% gain, and even as we see the Bank Nifty, well, move in and around the 48,000 mark. Let's move on and talk about how things are panning out as far as the option space is concerned. And for now, even though we have a lot of open interest building up around 22,000, at least as far as calls are concerned, we're starting to see a lot more traction around 22,100. That's as far as the final expiry of the month of January is concerned. And on the lower end, we continue to keep an eye on 21,500, 21,600. That's where we have a little bit more accumulation around the puts. In terms of change in open interest, naturally, considering we saw the Nifty move higher, we saw a little more writing around the 21,700 puts as well. So keep an eye on that one. And in terms of all the stocks which are in focus today, we do have longs building up in ONGC, Tata Consumer, Chamal Fertilizers and Coforge. Metropol is looking at quite a bit of weakness, so shorts building there. And about a short covering for Polycab, but it's not very strong. It's still below the mark of 4,000. Besides that, we're seeing longs unwinding in Dr. Lal Path, Delta Corp, BHEL, and Bank of Baroda. Watch out for some of these names, but I reckon as we move into the next week, all eyes will still be on the indices.
Right. Agam, it is indeed a very cheerful Friday afternoon. We're going into the weekend with the bulls taking the Nifty to new highs. This wasn't expected or planned. We opened around levels of 21,700 and have made a very sharp up move, went all the way up to 21,900, now just below those levels as we speak. The breadth of the market looks good. Broader markets are moving in line with the benchmark, and Bank Nifty is interestingly also pulling its weight together. Dharmesh, ahead of banking earnings, any stocks that you would tactically add to your portfolio?
Yeah, I mean, this space does give you an opportunity, especially the private sector banking space. I think they are sweetly poised in this economic environment juncture where we are standing. And there we think ICICI Bank, Axis Bank, Kotak and HDFC. This is the 4-stock basket which we are recommending to our clients to add to the portfolios. And all of these 4 stocks are likely to do well, not only on the credit growth path, but also on the asset quality. There will be less slippages and the NPS will get improved. At the same time, they would be able to manage their NIMs very well. So there, I think still the juice is left around 10-15% kind of from here till budget on. Upside move is likely to be there. Valuation wise, they are just reaching to extended 1 standard deviation kind of premium valuation multiple. But as of now, they are in between mean and 1 standard deviation. So there's a scope left out there. So this is the basket which looks attractive. I would just like to add a point. I mean, NBFCs have moved quite a lot, but one should be mindful of the fact that unsecured part is showing some stress. That is what we had a word with on-road checks is suggesting that, and there can be some slippages coming through. So take this run up to book your profits and get lightened on the NBFC space and convert that to the private banking space.
Kunal, how are you feeling about banking? I mean, it's come through very strongly. It wasn't expected. There was enough and more resistance at higher levels on Bank Nifty, but 47, actually it's even off the day's high point, but still not looking bad. It did well and it fell again, and a little bit of up move now. At 47,600, would you go long Bank Nifty for the Jan series?
Yeah, I think looking at the overall structure, Bank Nifty still remains in a broader range. 48,000 still continues to be a resistance for Bank Nifty. On the lower end, 46,900 is a support. Now you can look at Bank Nifty at least showing some pullback, but HDFC Bank, which has the highest weightage in the Bank Nifty index, is again going on the lower end. So for me, if Bank Nifty has to turn around, it has to cross 48,000 decisively. Then you will see the real short covering coming in. Probably that might take Bank Nifty even to the levels of 50,000. As you mentioned, if Nifty has to go toward the 22,000 mark and surpass it, Bank Nifty has to start contributing to that. So definitely from the current levels, the risk to reward ratio does favor on the long side. 47,000 continues to be a strong support. Till the time we hold these support zones, we continue to be bullish. 48,000 is the first hurdle. Once that is taken out, then you can add more long positions for target of 50,000 on the upside.
Right, those are near-term targets on the Bank Nifty for you. But, the other one that's going to be in focus on the back of earnings, we're starting to get into the thick of earnings, Samina. And, Avenue Supermarts is one which, everyone will have their eye out on. It's a funny chart that we're seeing on that one intraday, spending some part of it in the red as well. But Q3 expected to remain weak throughout. Revenue per square feet has been impacted by an inferior product mix, especially basis whatever numbers that they disclosed, in their provisional numbers which they disclosed for Q3. Right. Revenue expected roughly 16%. EBITDA margins expected to expand a wee bit. And profit after tax expected around 620 crore, which is expected to be muted, 6% higher year over year, Samina.
It hasn't been. I mean, we saw those business updates. They don't look too promising as well. So keeping that in mind, it's going to be a quiet quarter for Avenue Supermart. But before we talk more about the markets and get in the last 15 minutes of trade, let's take a look at the Mumbai Trans-Harbour Link that opens today. My colleague Malika Mishra tells us how Mumbai's second sea link will change travel.
The Mumbai Trans-Harbour Link, India's longest sea bridge, will be thrown open by Prime Minister Modi on January 12th. Also known as the Sewri-Nhava Sheva Sea Link, the 22-kilometer-long bridge will cut travel time from Navi Mumbai to Mumbai from 1.5 hours to 20 to 25 minutes. The bridge starts at Sewri in South Mumbai, crosses Thane Creek and terminates at Nhava Sheva near Chirle village in Navi Mumbai. The 6-lane bridge will also provide connectivity to the Navi Mumbai International Airport, JNPT Port, Mumbai-Pune Expressway and Mumbai-Goa Highway. It will have 4 interchanges, Sewri in Mumbai and Shivaji Nagar SH54 in Jasai and Chirle on NH348 in Navi Mumbai. While the bridge will bring relief to travellers, it comes at a cost. The Maharashtra government has decided to levy rupees 250 one-way toll, which is half of rupees 500, the amount that was initially proposed by the Mumbai Metropolitan Region Development Authority. However, many still feel that it is expensive. Let's compare the cost of travelling from Sewri to Nhava Sheva with and without the bridge. It currently takes 1.5 hours to cover about 53 kilometers between Sewri in Mumbai and Nhava Sheva in Navi Mumbai. This route takes the Eastern Freeway, Mumbai-Satara Highway, crosses the Vashi Bridge, takes the Vashi Flyover and then the Sion-Panvel Highway all the way to Nhava Sheva. The one-way toll at Vashi costs rupees 45 for cars on this route. Two-way travel will take nearly 3 hours in total to cover over 100 kilometers. And car owners will pay a total toll of rupees 90 for a round trip. Now, the new Mumbai Trans-Harbour Link allows direct travel from Sewri to Nhava Sheva in Navi Mumbai, taking around 25 minutes to cover 22 kilometers. The two-way travel will take about 50 minutes to cover 44 kilometers at a total cost of rupees 375. So the simple comparison in rough figures is 100 kilometers, 3 hours, rupees 90 versus 44 kilometers, 50 minutes, rupees 375. Now let's compare this with Bandra Worli Sea Link. The island city will have 2 sea bridges once MTHL is operational. So what's the cost per kilometer on the Bandra Worli Sea Link and MTHL? The MTHL is 22 kilometers long with a toll price of rupees 250 one way. That makes it rupees 11.4 per kilometer. The Bandra Worli Sea Link is 5.6 kilometers long with a toll of rupees 85, which is rupees 15.2 per kilometer. So the cost of travel per kilometer is cheaper on the MTHL than the Bandra Worli Sea Link. Now the choice is yours, whether you would want to travel from Sewri to Nhava Sheva and back, covering over 100 kilometers in at least 3 hours on paying rupees 90 in toll, or in less than an hour, traveling 44 kilometers and paying a toll of rupees 375.
It's a very, very significant day. This is about to change the face of travel, not just for a city, but eventually for the state as well. Exciting. It is the Prime Minister who will be inaugurating the much anticipated link. Well, let's move back to the markets. We've got a few more minutes to go. Dharmesh, I want to come to you on Avenue Supermart. This one has been on a downward spiral for the last, 2 calendar years now. We saw those business updates. They didn't look very promising. The stock performance has been disappointing as well. In terms of business update, while we did see a 17% improvement in its standalone revenue, there was only a 5% growth in revenue per store. And even the expansion has not been on point, at least in terms of what they'd guided. Now, with earnings expected later today, how would you view Avenue Supermart? Is this a stock that you hold?
No, I don't hold that, and the recommendation is to book profits. So see, I mean, it's still trading at 100 plus kind of a PE multiple on a TTM basis, and even if you discount future earnings, it would be around 75 to 80. The best revenue growth which this company can get, being a brick and mortar company primarily, would be say 18 to 20%. So such kind of a revenue growth, and I mean ROEs are low. Why do you want to give it such a high valuation multiple? The point here is that it's being held by very strong hands in the market, and they are unlikely to offload it soon. So they will like to give it a time, and the quantities are very huge. If it's downloaded in the market, it will cause a serious stock price correction. So valuation is the only concern. Nothing wrong with the business. Business is doing well. There are cycles in the business which this company is also going through, and it's getting a very stiff competition from Reliance Retail and the likes of that. So this is going to be a tight spot for the people who have bought into this company and still holding it. So future doesn't look so bright for it as far as stock price is concerned.
Well, thanks for that viewpoint, Dharmesh. Not very, in fact, not at all bullish on Avenue Supermarts given the valuations. But let me take it to Kunal. Kunal, on charts, how do you look at Avenue? Does it look interesting? How do you look at, what are the charts telling you?
Yeah, I think if we look at the chart perspective, the stock has entered into a clear-cut downtrend. There was a breakdown which was given by DMart from the levels of 3950. Once that is taken out, we have seen a level of 3,800 on the downside. So if you get any pullback into the stock, I think that could be an ideal opportunity where you can exit your long positions. Probably 3,900, 950 is the zone, which is the resistance, where you will get a good opportunity to exit. So if any bounce in the stock, utilize that to exit your long position.
Right. Dharmesh, let me come back to you. Now with regard to, the Nifty Realty, I'm going to try and switch focus here. The Nifty Realty has done extraordinarily well through 2023. You've spoken about how overall valuations are looking slightly expensive. But how does the Nifty Realty look to you? Because we've just hit our life high on the Nifty Realty as well. How are valuations looking to you? It's up 2% in trade today as well.
I mean, on current earnings, the valuation does look stretched, but there's still a lot of room left out there as far as Nifty Realty is concerned. If you do the ground check with all these real estate developers, the inquiries are very strong with them. The bookings are equally strong, and they have delivered. I mean, the type of numbers they have delivered on the business update across the board has been phenomenal, which is likely to continue. And let's not forget, we are at the top end of the interest cycle. So next couple of months, if the inflation behaves the way it is behaving, we are likely to have interest rate cuts, which will add the added advantage to the customers to lap onto their dream property. So that is the segment to be into. And I think from here on, luxury has been doing well. But affordable and mid segment, which was like a 27, 28% kind of a growth, is likely to pick up soon. So it's in a sweet spot. 30, 40% index gain is likely by the end of 2024. And if you are fearful of this sector, then play it through housing finance companies. So that's the second proxy play to this space, and which also looks very good. I mean, PNB Housing Finance or Canara, Canfield Homes are looking too good to me at this sector.
Right. Very interesting. You're expecting a 40, 50% or maybe 30, 40% upside this year on the back of a year where we've seen the Nifty Realty go up by 50+%. So that looks extremely interesting. But any specific names that you have within the realty pack? You did mention, some names outside of the realty pack, housing financiers and the like. But within the realty pack, any names that you find are still looking good from a value buy perspective? Dharmesh?
DLF over, direct plays like DLF, Oberoi Realty are looking good to me, even at current levels. And they have projects lined up where this profitability will be far higher than what they are standing as of now. I mean, 35% kind of a CAGR growth for next 3 years is what we are expecting from both these companies. Along with this, Phoenix will looks very attractive to me because even the commercial rentals have picked up in a big way. And this company also enjoys a decent property exposure to that side of the market, lease rental side of the market. So these three stocks look particularly good to me from a basket buy perspective.
Bijli is now down 6%. I'm not sure what's happening on the stock. It's getting a massive sort of drubbing on a day when the markets itself are looking really good. Kunal, you want to come in on your real estate picks? Anything you like here? Today is a bit of a quiet afternoon, but some of those names have been raging in the last couple of weeks.
I think reality as a space has been a massive outperformer, and I think there will be selective counters which will be doing quite well going forward. One stock which still looks very attractive to me is Oberoi Realty. The stock on the technical chart has been trading in a strong uptrend. We have seen the stock surpassing its previous week high as well. So I think from the current levels, even if I talk about Oberoi Realty, at least I look for targets of 1700 to 1750 on the upside. So 1540 is where currently it is trading. Any dip even you get into the stock, utilize that to buy. 1450 is the stop loss on the downside.
It's a buy call coming on Oberoi Realty. Pardon me, the index, it's at a record high, is actually up 2% on the Realty pack. We've got about 6-7 minutes to go as we start wrapping up trade. Kunal, you want to give us your buy today, sell tomorrow, to sell Monday strategies?
First thing, what I would like to highlight over here in today's trading session is the PSU bank space. That is where we have seen the entire space have been buzzing. A fresh momentum has been picked up in the entire space. I think this will continue to do well for the next 1 week or so. Out of that, the fresh breakout of what we have got over here is in Bank of India. The stock has given a trendline breakout on the daily chart with volumes. 120 was the hurdle for the stock, what it surpassed, and from there onwards, we have seen a continuous buying. So I think keeping that as a stop loss on the downside, one can pay for long side, looking for targets of 140 to 150 on the upside in the very near term. So Bank of India is something which is looking very good. Second space, which is looking very attractive, is the IT space, specifically the mid-cap IT. So that is where the focus is. Mid-cap IT could continue its momentum going forward. From that pack, my top pick over here would be Sonata Software. Absolutely, the trend for the stock is very strong. Even in today's trading session, we have seen a fresh breakout with volume-based buying. So I think this could again continue to make a new high as well going forward. 750, 740 is where currently the stock is trading. One can initiate long positions at the current levels, keeping a stop loss of 720, looking for a target of 800 on the upside.
Right, Bank of India, Sonata Software, those are the couple of two picks that Kunal has. Dharmesh, let me go across to you. What are the specific pockets of value that you are seeing in the markets which are at all-time highs? I understand. But what are the specific pockets of value? It's a bottom-up market. Any specific names you have in mind?
Yeah, I think at this juncture, railways infra stocks are looking very good. I mean, they have run up, no doubt, but still a lot of space is there for them to, peak to get to the peak valuation multiples. So there, I think RBNL is a very good pick. They are sitting at 3x book-to-bill ratio. At the same time, the management is expecting from 67,000 order book to climb to 1 lakh crore kind of order book by the end of this year. And the government has, sounded that from next budget onwards, that is the main budget when it will be rolled in the month of July, 20-25% uptick in the railway budget allocation is likely to be there. So this company stands to gain the most from the infra development, from 2 laning to 4 laning to 6 laning. Laning of new tracks, metro tracks, bullet trains, everything is coming into play, and this has a monopoly business out there. So 240, 250 is the target price where we are looking at RBNL from a year's perspective. And on the same lines, electrification is also taking place in a big way. And there, I think Ircon stands a good chance. So both these companies have shown a good trajectory, execution. ROE multiples are good for RBNL, it is 20% plus, 15-16% is Ircon. So Ircon again is a buy with a price target of 240 from a year's perspective. Any declines out there should be utilized to accumulate these two stocks.
Kunal, 2-3 stocks in the mid-cap universe that have moved up in the last hour of trade. One is Alembic, you've got Birlasoft and ONGC as well. Any trades on these ones? Any sort of breakouts that you're seeing on either Alembic or Birlasoft or even ONGC for that matter?
I think ONGC is what we discussed on the show as well earlier. I think T20, 223 somewhere we suggested a buy. I think the momentum is still intact, a fresh breakout which have got in the stock. So 230 is what I'm expecting. So continue riding ONGC. Oil and gas as a space is looking very good. Specifically, ONGC has given a very good breakout. So 230 is an immediate target what I look for ONGC.
Right. Dharmesh, let me come back to you because I know Kunal's view on PSU banks, quite positive, quite bullish. But what a stellar rally it's been. From the 52-week low, stocks have virtually more than doubled up. And if you're looking at a 2-year horizon, stocks have done extremely well. Several reasons for that kind of a rally, but talk to us about how you view valuations in some of these counters and, where do you see good value if one were to enter at this point?
Yeah. So let me bifurcate into two segments. For traders, I think it's time to take profit in PSU banks because the numbers which will come out for Q3, we are not expecting a good set of numbers on the asset quality front and the profitability front. Even the NIMs are likely to get some bit of a compression out there, which would be bigger than their private sector counterparts. So that is the take from a very, very short-term perspective, just from the earnings update. But if you are looking at long-term perspective, say next 2 years or 3 years, so I think eventually these companies, the top PSU banks like SBI, Bank of Baroda and the Canara Bank, they would be valued at par with their private sector counterparts because a lot of automation has taken place, lots of technological development have taken place, and there has been a complete employee overhaul. The approach has been now totally different for all these banks. So that's a long-term call. From that perspective, all PSU banks are a doubler from here. So any declines just based on quarterly earnings update, if it is materialized of 10-15%, should be utilized to buy these stocks and keep it for 2-3 years. I'm sure you would be laughing your way out to the bank.
Dharmesh and Kunal, thanks a lot for joining us today. It is what a Friday. It's euphoric. The markets have made a new life high in intraday trade. The last time we did that was on the 1st of Jan when the Nifty closed shop at 21,828. Today, of course, 21,928 was the new intraday high that was made. We are closing slightly shy of that, but closing about 21,900 in today's trade. We started off strong, and remember the week was actually very fatigued. Despite that, it was quite a breakout move on the index very soon after the tech companies kicked off the earnings season. Well, the Nifty 50 goes on with gains of 265 points, 10 points shy of its intraday high. Bank Nifty as well does okay, contributes to the Nifty but not substantially. It's 0.6% gains coming in on Bank Nifty. Broader markets for a change actually have underperformed the benchmark. The mid cap and the small cap index going home in positive territory but only marginally higher this afternoon. Well, what we must talk about and cannot go home without talking about is the IT pack. The day belonged to the IT sector. Across the board buying was seen from your Infosys, TCS, Wipro, HCL Tech, Coforge, you name the counter, and the stocks were raging in today's trade. IT pack goes home with gains of 6%. I'm not sure when we saw that last, but today the day belonged to IT, like I said. Infosys, TCS kickstarted the earnings season. Numbers largely were in line with what the street was expecting. There was no news being good news, and that's really what the street was taking heart from. Infosys Infosys opened the day with 3% gains, goes home with gains of 8%. So a massive surge at the day's high point is where we see Infi closing sharp. Along with Infi, you also had we also had TCS going home with smart gains. Nothing is compared to the rally Infi saw, but nevertheless, TCS has gone home in positive territory as well. HCL Tech will report earnings anytime now. The stock is up 5%, or rather went home with gains of 5%. Tech Mahindra also up 5%. You've also got Wipro that will be seeing some good gains. Remember, HCL Tech is expected to report a very solid quarter. It's supposed to do better than its peers. Seasonally a strong quarter for HCL Tech, and that will even in fact reflect in the earnings, which will be reported shortly. ONGC started the day pretty well. At 2:30 this afternoon, the stock was up 2%, but it's going home with gains of 6%. So a big volume move happened on ONGC in the last half an hour or so. Well, along with that, you had banks. Some of your banks have done okay. So SBI being one of them, 2.5% higher. IndusInd Bank going on marginally higher. But like I said, everything else was subdued. It was all about IT, and I think it'd be fair to let them wear the crown in today's day. Few names that did badly, a couple of banks. You had BPCL, had a quiet day, Nestle, Maruti, subdued to say the least. But a new intraday high, a new closing high on the index, and Harsh, that is all thanks to what Infosys and TCS have managed to do or not do in this case.
Absolutely, and look at the quantum of gains. If I can again pull up the contributories, which we did at the start of trade, or rather at the start of this show today, you'll clearly see 130 points contributed by both of those bellwethers. And, the net contribution from all contributories, negative plus positive, was 260. So half of those points coming in straight from both of those counters. You also had the likes of an ICICI and a Reliance contribute a bit, which is a positive because, excuse me, Reliance has done fairly well over the last couple of days as well. But quickly switching to the mid-cap and small caps, the Nifty mid-cap index also gained around 1/3% higher. You had the likes of an IRFC, Macrotech, Bank of India, Coforge, Union Bank. So it was not just IT, but outside of IT, it was PSU banks and it was Realty, which was leading the pack. And if we can have a couple of those, both the PSU Bank index, the Nifty PSU Bank, as well as the Nifty Realty, to kind of show that both of them went home with 2% gains. In fact, Nifty Realty at an all-time high as well. Where the Nifty mid-cap is concerned, you had the likes of a Nykaa, which was languishing in trade. Yes Bank, Biocon, Fortis were the key laggards. Quickly, with regard to also the Nifty small cap, you had pretty much all the top gainers on the Nifty small cap being IT. And then you would throw in Amber Enterprises, which was the other one, which was gaining in trade. Among the losers, you had the likes of a Metropolis. You had the likes of an Ease My Trip, which was up almost 20% yesterday. You had Century Textiles, which were the key losers on the Nifty small cap. But for now, with that, we are completely out of time on this edition of India Market Close. I wish to thank both our guests for all of their views. Thank you, gentlemen. But for now, from Samina, myself, everyone who puts the show together, happy weekend. Thanks so much for watching. Stay tuned to NDTV Profit. We'll keep you updated.